the use case for humanoid robots here is huge because they can ride in the car and they can pick up the items and they can carry them to the door. And welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Good. Well, I have a person who may speak today or may not. I've staged the gal Jillian's daughter, who is researching BioNTech and Spotify. She may have more to say next Monday, but let's get started. Exhibit C is basically all about Iran. And from a demand point of view, I guess you could say it's all about China. But as I keep pointing out, the China demand is flat. Look at 25 versus 24, flat as a board. And I think the Chinese economy growing 5% real growth, even though there's a heck of a lot of battery cars on the road and more use by trucks of LNG and compressed natural gas, so less diesel demand, I still think a reasonable expectation for demand from China is to stay flat, much the way the US, Europe, Japan, other developed countries are flat. I think what's happened is China's just gotten mature. In terms of supply, it's all about Iran. And you can see I cut Iran from 3 million barrels a day to 2.5. I think that the Trump administration's first move is going to be to reduce exports from Iran. As you know from prior Wednesdays, I do think it's a possibility that Iran will negotiate with the incoming Trump administration to get the sanctions lifted. But especially after Syria, after they're basically losing whatever influence they had in Syria, I think it's going to be hard for the clergy, the government of Iran to do something as dramatic as making a deal with the Trump administration. So I think what's more likely, at least in the first half of the year, is a reduction in Iranian exports. That's very important because the 4.4 million barrels of surplus in 24 is just too high. A normal amount of surplus, if you go back to 22, would be 2.4. If you look at the supply in 22, most of that surplus would be in Saudi Arabia, claiming that they could go to 12, probably some in the UAE, that they could do more than 3. So something like 2 million barrels of surplus is fine. 4.4 is not. And hopefully the reduced supply, less demand. I mean, if you go down to the bottom, you look at demand, 23 versus 22, it was 101.8 versus 99.4. But you can see the increase in demand is slowing down. Only 1 million barrels a day in 24 and 1 million barrels a day in 25. So the solution to holding oil price in current levels, say $75 Brent or $74 Brent, is not in the demand, it's in the supply. Natural gas, we're having some cold weather in heating oil and natural gas demand in the Northeast. November was quite a lot warmer than normal, and all that was recovered in December. January, we'll see. But so year to date, we're about flat in terms of degree days and whatnot. And you can see the price of natural gas has responded. The near month is 338. The future price is 330, is almost up to the 340 that's predicted 25. I know each Wednesday I make the same point, but it's really important that dry gas production not be more than 105 next year. The power increase, everyone says AI, artificial intelligence. I don't think that's going to be more than 1.5 Bs a day, which is built in here and has been the case since 22. On LNG feed gas, very disappointing to have it flat, 24 versus 23. But Plaquemines Parish, which is the latest venture project, is coming on. There's some additional capacity at Cheniere Corpus Christi. I'm pretty sure that 1.5 Bs a day increase in LNG will happen in 25. Now, you still have a surplus of 1.2, but you just can't have a surplus of 3.4 like we had in 23 or 1.9. I mean, look what happened to the price of gas. I mean, it averaged 240 in 24. That's barely more than 220 in 20. And it's just remarkable if you look at macro events because of the invasion of Ukraine and because Russian gas wasn't available to Germany. Look what happened to the gas price in 22, $6. Now, that wasn't necessarily good news. That jump in gas production from 95.5 in 22 to 101.8, that had something to do with very high gas prices in 22. So hopefully we'll get back into something $3.40 or so and change. We always look at Exhibit A. This is where Elon Musk and Ramaswamy are going to go to work. Musk says $2 trillion of reduction in expenses. That's aspirational, obviously. If you look at our 24 fiscal year, we took in just under $5 trillion. We spent $7 trillion. The difference is just under $2 trillion. I think a more reasonable expectation now is to try to reduce spending by $1 trillion. Enormously difficult to do, but that would take our deficit as a percentage of GNP from 6% down to 3%. I think at 3%, I don't think you'll start to see increased 10-year rates. I think that 10-year rates, which are now around 4.5, the Fed just made a decision this afternoon to come bring their Fed funds rate down by a quarter point. They're saying that the neutral rate, in other words, the rate they'd like to get to by sometime next year, is somewhere in the 3.25 range. I think if progress can be made on getting the deficit on the way down to 3% of GNP, or about half of what the deficit was in the last fiscal year, I think that differential, the 10-year bonds at 4.5 and the Fed funds rate, neutral rate, the Fed likes to call it in the 3.25, 3.5 range. Those look like reasonable forecasts for next year. I know Mike and Jason are more alarmist than I am, so you can turn it over to them for any commentary they have on that forecast.
I think it'll be interesting to see how it plays out with the Elon's plan. Is he also wants to reduce regulation to stimulate growth. If GNP was growing, what's that do for inflation and the interest rates? So we'll see if that takes shape.
Yeah.
I think that we're going to be spending a lot of time on Exhibit A this year. Or my forecast for 2025 is lots of time on Exhibit A. So
yeah,
my understanding is they've already assigned some attorneys and law enforcement, or at least are intending to direct them towards building cases that might help deregulate or reduce some of the fraud and abuse.
Right. We've changed our schedule for the next 2 weeks where we're going to do Mondays at 3:30 and 12:30 Pacific time, both Mondays, both the Christmas week Monday. And so we've got extra time. I thought one of the things we might do with the extra time, at some point, Mike is going to lead us through how we did with the cash flow forecast. But I don't think we're ready to do that today. Maybe we'll do that Monday. But I thought rather than starting at page 1 with all the high cash flow companies, we'd quickly get through the back of the memo, page 20, and I'll just make a couple of comments and then see if Mike or Jason have anything to add. I apologize, but these numbers are only updated for the 6 months. Over the holiday period, I'll get them up to 9 months. Five Below is something I've owned for a while and was a real rocket ship. Got in trouble. I think it's probably merchandising. They've changed the management out, and now it's kind of starting to recover. I don't know whether it's a good investment or a bad investment. I tend to buy things and hold, but I certainly happy that the new management is making progress. Airbnb, I don't know. Airbnb just doesn't seem to kind of maintain a significant growth in free cash flow. I know Mike is kind of anti-Airbnb. DoorDash and Uber seems to me are really kind of threatened by self-driving, by Tesla self-driving, where Jason is the expert. And then Harrow, of course, is one of the companies that Top Mark owns. Why don't we start with Jason on anything notable on Harrow?
So a few weeks ago, Harrow reported their earnings, and it was a bit of a disappointment, but they had a high-class problem of demand exceeded supply, and they couldn't supply enough of their drug to ophthalmologists. So this quarter, they say they're going to fill that backlog and then exceed expectations, and could shape up to be a good quarter. For Uber, Mike and I have been talking about this one and how it plays with Tesla, and it's hard to think there might be a monopoly in all kind of automated transportation, and Uber has a partnership with Waymo, and Waymo is already servicing more rides in San Francisco than Lyft. So maybe there's a future where Uber is the duopoly in autonomous transportation.
I agree with that. I think there's always going to be an opportunity for someone to aggregate rides. And being at that choke point of aggregation is going to command some slice of margin. And if you have enough scale, you'll generate excess profits. So, I've sort of capitulated a little bit on this, my views on Uber, because I think that RoboTaxi is going to be a thing.
Yeah. One thing we were thinking through is as more people maybe transition to using a RoboTaxi or Uber service as their sole transportation, there won't always be a Tesla on call for you. So Uber with a manned driver could be your backup there. So they could actually see demand for their traditional service increase.
Do you think Uber will run RoboTaxis?
Oh, absolutely. One day they will. That's been their goal from the get-go.
But Teslas in particular, I also would agree that would likely be part of the future solution. It's hard to say. I mean, maybe Musk and Tesla want to try to do it all on their own. But just think about what the implications of that are. Is you'd have to set up regional service centers. You're going to have to figure out a way to clean all these things. And so maybe it makes sense to do it all yourself, but maybe it makes sense to have a partner. So we'll see. I mean, people have speculated that Lyft is a potential acquisition target because, if somebody wants to bolt on this capacity in a vertically integrated fashion, they would be a good buy. I think we're just going to see how all this plays out. The reviews on the latest version of full self-driving are pretty phenomenal. So I recently read about somebody that just used it to drive all the way from San Francisco to San Diego without any human intervention, aside from plugging in the charger when they had to stop at the charger. So kind of cool reality that we're about to step into. So I think it's important to watch these ones.
DoorDash going to need robots to move the order from the RoboTaxi to your door? Yeah,
I mean, I think so. The toughest part of any logistics network is the last mile, and the last mile. The even harder part, once we have robotics that can get a car to your front door, the next hardest part is going to be getting the product from the car into the house or apartment or whatever. And the use case for humanoid robots here is huge because they can ride in the car and they can pick up the items and they can carry them to the door and theoretically navigate an apartment building or, lots of different think about like the standard, house in America maybe covers a chunk of the population, but there's a large chunk of the population that live in stuff that's slightly different than normal, or apartment buildings or whatever. And you really need a generalized solution for all of those problems. And the humanoid robot is probably the best approach to solving those generalized solutions. And to point out, like, Tesla's not the only one that's doing this. This is something that there's another startup called Figure who's actually shipping robots. They've got some of their humanoid robots operating in BMW factories. So this space is heating up quickly. I think robotics is going to be a really exciting story for the next couple of years. NVIDIA just announced a new chip for robotics applications, running large language models on robots. So, all of this stuff is going to move very quickly. It's going to be an exciting couple of years.
I know I said we'd stay away from page one, but as long as we're talking Uber and DoorDash, we have to look at Tesla on page one, because you'll remember from prior Wednesdays, I really think the automotive part of Tesla is worth about $100 a share. So it's a heck of a lot of money riding on full service driving. If you really believed that this was the future, do you stick with Uber at 40 times free cash flow, or do you pay $1 trillion for Tesla with $4 billion of free cash flow, which is a couple hundred times free cash flow? What do you think, Jason? Of course, the easy answer is you buy half of each. Then you can't be half wrong. But Jason, if you had to put money on one or the other, Tesla at current value or Uber at current value, where would your decision be?
I think I would choose Tesla. It's a bit of speculation on what the future of Uber could look like, but we know Tesla is they're the provider of the vehicles. They're the provider of the brains of these vehicles now. They're going to license that out. So it's expensive now. You'd be paying up, and maybe you wouldn't get a return for years. But at some point, it seems like it would be a smart decision.
I'm going to skip page 19 because I'm going to update it this weekend. We could do it next Monday. Page 18 is commodity companies. I would say not terribly interesting. Obviously, copper and lithium and even ammonia, it's the fact that China's economy is changing just, makes those things difficult. I mean, China may continue to grow at 5%, but it's going to be more services, more consumer goods and whatnot. So I think all these things are under a bit of a cloud. Page 17, it's kind of an odd collection. Costco is one of the great companies. FedEx and United Parcel have the unhappy situation that they have to compete with Amazon Logistics. We were talking about Exhibit A. What do you think the chances of privatizing the Postal Service so they not only have to compete with Amazon, but also with a privatized U.S. Postal Service? That seems to me kind of unlikely, but how does it look to the two of you?
I would say that the Amazon has proven that you do not need government intervention in order to scale a global logistics operation. So if you want to have more competition in global logistics, maybe it does make sense to try to privatize USPS, because there's no way that USPS is going to be able to deliver the same level of quality that Amazon's going to be able to deliver. And our hope is that somebody else can. So I think as a government entity, you don't have a chance of that. If you make it public, you do have a chance of that. We also run the risk of, if Amazon's the only company that's able to deliver to your door in rapid order, we're completely dependent on one company. And just have the next best alternative be a sort of broken, unfundable operation. I think there could be a lot of benefits of trying to take it public.
Right. Page 16, I did update the restaurant companies here, and Chipotle continues to do very well. The Starbucks board hired the Chipotle CEO away, and maybe that'll make a difference. Certainly, I think Starbucks is trading higher than it otherwise would, based on Mr. Nichols' reputation for what he did at Chipotle. Anything else to add there?
Yeah, I think I'd rather be at Chipotle than Starbucks, but that's just me.
Yeah. And Mike and Jason do own Celsius, which is a competitor with Red Bull and Monster. And I guess the case for Celsius is it has better ingredients in it. But how do you think Celsius is doing here at the end of 24, going into 25?
Yeah, sales are slowing, so it's a concern. But the stock is relatively cheap at 12 times free cash flow. They generate cash, and they have a lot of cash on the books right now.
Yeah, their balance sheet is really bulletproof.
Right.
Yeah, for a company that has potential to grow.
Yeah,
it's hard to be disappointed about the valuation.
Right. We're all the way to page 15, so we can get some input from Sage on BioNTech. Just as an introduction to page 16, I mean, Pfizer is just a big company. Now, they were BioNTech's partner for the COVID vaccine. LNTH and Vertex are two companies that Mike and Jason have in their partnership. For upside between LNTH and Vertex, how do you guys rank the two of them?
Let's see if we answer the same way. We model this stuff out, but I think there's very much about the future that you can't model, and it has to have more to do with your conviction. I think Vertex has very high long-term potential if a handful of things fall in their favor that could make it worth many times over what it is today. So I would say Vertex.
Yeah, I was going to go Vertex. They both have a lot of potential. LNTH's potential is with a diagnostic for Alzheimer's disease. So there's a huge potential there. It's being used in a lot of clinical trials right now, and if that becomes a standard diagnostic, there's the potential. But Vertex has a great company culture and management. So I'd put my bet there as well.
Yeah. Sage asked after she did a bunch of work on BioNTech, said, what will I do next? And I said, well, the logical one is Moderna. So I think Sage has already voted that she likes BioNTech better than Moderna because she said she was going to go work on Spotify was her choice for her second company. But what impresses you with BioNTech in terms of the founders and the company vision and whatnot as compared to Moderna, Sage?
Yeah, so, I'll be honest, I don't know that much about Moderna, but I can speak about BioNTech. I think what was great about the founders is they're both really scientists and doctors at heart. Both of them have MD, PhDs. They're both German nationals. Their parents are from Turkey. Well, one of them was actually born in Turkey. And I think they're just both very down-to-earth people who are super interested in the science and actually helping people. They kind of came to business second after being interested in science because they realized that was the best way to have an impact with the technologies and findings they were figuring out in the lab was to have a company where they can actually get these drugs out to real patients. So I think that was very impressive and shows that, they truly care about their mission.
So the next thing she's going to do, she's going to look at the beginnings of Spotify, which is Napster, to speak about, quality of where you came from. These people were, breaking the law theoretically, but we'll hear more about that Monday. The problem with Moderna, as you can see from page 16, is they're going to run through their cash pile, which they came from the COVID vaccine. Moderna's going to run through it a lot faster than BioNTech, and these things, as they go through the various trials, just the difficulty where they're both trying to come up with mRNA technologies to combat cancer. I mean, this is a very, very difficult thing to do. The fact they were so quick on COVID doesn't mean that this can happen anytime soon. So, Jason, any commentary either way? Now, on the other hand, the first one to come up with a product is the one that's going to be the better investment. How does it look to you, Jason?
Well, they have to come up with a better product. I think another low-hanging fruit they went after was a flu vaccine, and I think that was the wrong path to take. But both of those companies had a COVID windfall, and it seemed like Moderna was more aggressive in spending that money and then less aggressive in curtailing that spend when the pandemic resolved. So, and BioNTech had a couple good releases of data, study data recently. So a couple wins there. Seems like they're more responsible with their cash. I like BioNTech better myself.
Mike, can you make the case for Moderna, just so that you and Jason aren't always on the same page?
Well, if you have $7 billion of cash in the bank and you're burning $4.5 billion a year in R&D, you're probably, hopefully, very confident in what you are spending your money on. So my understanding is some of these later stage cancer vaccines that they're working on, I mean, they could be huge. So, but in the world of investing, you do need to think about, depending on how you invest. If you invest like we do with a concentrated portfolio, you have to think about risk as the probability of actually losing your principal. And it's a little harder to make that case with Moderna, that it's got great upside and downside protection.
Okay, let's take a quick break for a message from Oakcliff Sailing.
Hi, Dawn Riley here with Oakcliff on a beautiful December day. We've done so much in 2024. 6 teams and 90 people went to Bermuda. Ian and Hans brought home the bronze medal. The silver medal went to the Youth America's Cup team. On shore, we've trained many athletes in the work of what it takes to put together a campaign or to fix the boats that have been broken. There's great stories that we're sharing in our year-end communications that you can click through and read for more details. But we also want to make sure that every single person listening to this understands that we are here doing the work, boots on the ground, and we're coming to you. We are on a collaboration and celebration tour. We want to work with the other people who believe so passionately in our sport. You can click and ask for a stop on the tour. You can come and train at Oakcliff. Or you can open up your checkbooks and make a donation to Oakcliff Sailing, knowing that a contribution is an investment into American excellence. Thank you. Have a great holiday, and I'll see you in 25.
Just to close, NVIDIA's been in a little bit of a downdraft. If we turn to page 3, NVIDIA's annual sales rate of around 130 billion. Is it possible that in 27 or 28 that it would get to some large number like 170 or 180 or something and be able to hold their margins? Or is that too ambitious a projection for NVIDIA?
Honestly, I don't think it's too ambitious of a projection. NVIDIA has made the correct investments early enough along that they're in a very enviable position. You know, the name NVIDIA was kind of spun around the word envy. It's interesting how that kind of plays out over time. They are the technology that this whole new wave of technology breakthroughs is built on. Making just another product that does something like what they do doesn't supplant their position. I think that so long as Jensen Huang is alive, they are probably going to be one of the top couple most valuable companies in the world. But that's not investment advice.
We read a book recently about Jensen, organizational theory is, you ought to, not have too many people reporting to you. You ought to spread out responsibility. And I think Mike's number for direct reports for Jensen is 65 people. Jason, you think that's one of the secrets of NVIDIA, or can he keep that up? Or
I don't know if it's a secret. Other leaders are successful with different models. It's obviously working for them. I do like the strategy of empowering staff to make their, lead their own little portions of the company, which I think they would have to do if there's less reports to upper management. So I like that strategy. A lot of these tech companies, and Jensen included, are comparing AI to innings in a baseball game. So they all say it's early innings. It's hard to believe it's not. We're just now learning about how it can generate video, high quality video, how we're in the first year of these kind of AI applications being able to drive cars. Robotics is next. This is just going to continue. We're going to need more compute as we put AI into basically every software product that we're using.
Since we talked about Tesla and Uber, and I know we covered some of this last week or the week before, but can Jason or both of you in the last remaining couple of minutes explain why Memphis was chosen, or how Memphis and where they're putting in 100,000 GPUs or more, how that is a linchpin or, the prerequisite or what have you for Tesla's full self-driving program.
Well, I mean, I think from why Memphis in particular, they were able to get likely some agreements locally that would allow them to very rapidly build out a large data center and have the access to the infrastructure they needed. They definitely did some interesting things as far as power goes, but having the space and to actually build that large of a data center new from scratch in a course of a very short period of time is really just shocking. And then there's the technological improvements that they've done that the rest of the industry hadn't been able to figure out. And that's building a GPU cluster of more than 32,000 GPUs. They've demonstrated they can do it with 100,000, and they have plans to scale that up 10x. So some of these things that we had previously been thinking about as constraints on maybe the improvement in the capability of some of these AI models are no longer considered constraints. So I think video is a really good application because it's huge. Like the file sizes are gigantic. Tesla probably has more of it than anybody other than Google probably. So if you look at the Google video generation model, they have more entertainment video, right? All your YouTube videos. Google now has the best video generation model out there. They just released it earlier this week. Tesla has the best full self-driving out there, presumably. Waymo's is also very good. So I think the scale of the data centers probably continues to go up. And the locations as to where those go depend on what jurisdictions are willing to accelerate the approval and timelines associated with building those data centers.
Jason, why do you think Microsoft and Amazon and Google and Oracle haven't done large new centers like Tesla has?
That's a great question. Maybe they didn't think it was possible to build a data center that rapidly at that scale. Now they know it is possible. Some remarks out of Microsoft is they're not willing to do the same things that Elon was to get the power that quickly. They are saying they're power constrained. They can't build new data centers and source the power from the local utilities in the locations they'd like to build the data centers. And that's probably a lot of the reason they say they're power constrained. It's just getting the approval to draw that much power from the grid wherever they do want to build them.
Yep. I think that's a constraint. The interesting thing, though, is that all these GPUs have gone out. Presumably, they've gone into existing centers. I don't know whether they pulled CPUs out and put GPUs in, but, so far as we can tell, people have been putting their GPUs in existing facilities, then probably drawing more power off the grid. I was talking to Mike this morning, Jason, that grid available or power on the grid is fairly cheap. I mean, it follows the price of natural gas. So, power has been available. But it is the case that if you want a large amount of power in a particular location, then that becomes an issue. And as you say, Tesla solved that in Memphis by doing gas power on turbines on trailers, which is, pretty unconventional.
That's a good point. And, the companies like Microsoft and Google and Apple have these clean energy mandates. So they're trying to source, grid power that was generated from wind or solar. And that's a bottleneck.
Or nuclear, which the time required to do small nuclear, even to bring older facilities back that have been some kind of standby, is just, first of all, it's very costly and then very timely. Anyway, we were over our 30 minutes. We will, as we've tried to remind everything by email, rather than go 2 weeks with no podcast, we're going to be doing Monday afternoon, Christmas week, and Monday afternoon, New Year's week. And I think next week, Mike and Jason are going to lead us through how our cash flow forecast that we made. So we'll start again with page 20, and they'll brief us on how the cash flow forecast came out. In the meantime, everyone be well and stay healthy and enjoy the holiday period. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.